Hey everybody, I'm back with another Sharp Out of Body Mythbusters. Today I'm going to talk about deductibles. Lots of people think that deductibles are much better lower, and I'm going to give you some insight on how deductibles and your insurance premium works, because I'm an advocate for a higher deductible. So if you have a lower deductible in the event that you have an accident that is your fault, this is where most people get messed up. The accident has to be your fault for you to pay the deductible. If somebody else hits you, you do not pay your deductible. But with that being said, you have an accident and it's your fault, you're going to pay your deductible to get your car fixed. Now, people think, well, that's a great idea because when I get my car fixed, I'm going to spend less money because my deductible is lower. That's very accurate. But here's the sad reality. There's a direct proportion between your deductible and your insurance premium. When your deductible goes down, what you pay for your premium goes up. When your deductible goes up, what you pay for your premium goes down. Now, this is very powerful information because you're going to spend the rest of your life driving. When I talk to the driver's ed classes, I tell them this all the time. You want that higher deductible. Now, the secret to having a higher deductible, if you have $1,000 or $2,000 deductible, you have to have that money in the bank, because in the event that you have an accident, then you're going to need that money. So don't go to that high deductible to save on your premium and not have any money in the bank, because then you're screwed when you get into an accident that's your fault. The other thing to keep in mind is, according to national statistics, and depending on which ones you listen to, the average for somebody to get into an accident is every 7 to 10 years. So the odds are in your favor that you're not going to have to pay your deductible. So you're better with a higher deductible and lowering that premium, because this premium, this is what I tell the driver's ed classes. If you were to drive for the next 50 years and never have an accident, how much of that premium are they giving you back because you didn't have an accident? That's right. The big fat goose egg, nothing. They're giving you nothing back. So why on earth would you pay them more for an insurance premium when you can raise your deductible and pay them less, knowing that none of that money is ever coming back? Now, here's another word to the wise. If you have the ability to save and put $1,000 or $2,000 in an account someplace in the event that you have an accident, you're now making money, because in today's economy, not much, but that money's making you money. Here's another thing to keep in mind. I usually tell people you should have 1.5 times your deductible reserved. So my point to this is if you have $1,000 deductible, you should have $1,500 in a reserve account. Because, for example, if you get into an accident, let's say you back out of your driveway and hit the mailbox, pretty common occurrence, and it's $1,200, you don't want to call the insurance company to have them pay $200 and then raise your premium. So you should always have about 1.5 or 1.5 times your deductible in that account. So the Mythbuster is low deductible, not a good idea. Works well for the insurance company. They may make more money, and they try and sell you that all day long. That high deductible works best for you, and they never talk about it. So take advantage of this. Call your agent today and say, hey, I want to raise my deductible, but make sure you got some money in the bank to back it up. Thanks, and be safe.